The screen flashes red. A pulse of warning light cuts through the darkness. In the middle of the Strait of Hormuz, a massive tanker sits motionless. It is a dead weight on the water. The sea around it is choppy, black, and indifferent. This is not a drill. There is no training exercise occurring on these coordinates. The vessel has lost power, its engines silenced, its momentum killed in one of the most vital arteries of global trade. The crew is locked in a desperate cycle of manual overrides. But the ship remains anchored by its own failure. Look at the horizon. The water is empty of other traffic. The silence from the bridge is absolute. This is the moment the world stops turning. The tanker is not just a ship anymore. It is a physical obstruction. A massive wall of steel blocking the flow of resources the entire planet depends on. Every second it remains stationary, the tension in the global market tightens. The waves slap against the hull, rhythmic and cold, marking the time that is running out. This is the point of failure. The red light continues to strobe, reflecting off the dark, churning surface of the strait. The instability is no longer a prediction. It is here. It is visible, and it is absolute. The tanker is not alone in its failure. Its silence ripples outward, creating a void that swallows the market whole. 600 million barrels of oil are now missing from the global supply chain. This is not a minor delay or a temporary bottleneck. It is a massive, gaping hole in the foundation of the world economy. 10 million barrels a day are effectively erased from the ledger. The math is brutal and immediate. Every refinery that relies on this flow is now starving. Pipelines are running dry. The pressure in the global system is dropping by the hour. You can see the impact in the data streams. The numbers are shifting, turning from stable projections into jagged downward spikes. This is the largest supply disruption in recorded history. The market is struggling to process the scale of the loss. Traditional hedges are failing because the baseline of reality has shifted. Your capital is currently exposed to this vacuum. As that energy vanishes, the cost of maintaining your position rises. Open your dashboard. Look at the ticker symbols scrolling across your screen. They are no longer just numbers. They are a countdown. Watch the red bars lengthen. Your portfolio is bleeding. Every percentage point that drops is a direct reflection of the crisis unfolding in the strait. You have spent years building these positions, trusting in the stability of the tech sector. But that trust is now a liability. Refresh the page. The losses have compounded. The market is reacting to the news, and your capital is the first thing being sacrificed. You are watching the value drain away in real time. This is not a temporary dip or a standard correction. It is a fundamental decoupling. The tech stocks you hold are not isolated entities. They are tethered to a massive, complex grid. That grid requires constant, cheap, and abundant energy. Without that flow, the entire structure begins to fray. You can see the correlation in the charts. As the energy supply tightens, the confidence in your holdings evaporates. The bleed is accelerating, and the screen is showing you exactly what happens when the foundation of your wealth begins to fail. Look past the ticker symbols and into the physical reality of your investments. Your tech holdings are not ethereal code. They live in massive, windowless data centers, humming with the constant demand for electricity. These facilities are the lungs of the digital economy, and they are powered by the very energy that is now disappearing. When the power grid falters, the servers do not just slow down, they stop. The cooling fans spin to a halt, the processors overheat, and the data streams go dark. This is the hidden link in your portfolio. Your gains are built on the assumption that energy is infinite and cheap. When that energy vanishes, the servers lose their heartbeat. The data centers become nothing more than expensive, silent boxes of metal and silicon. You are holding assets that rely on a constant flow. Without it, the logic of the tech sector breaks. The software, the cloud, the artificial intelligence, it all requires a physical foundation. As the power supply constricts, the value of these companies evaporates. As the lights go out in the server farms, your capital disappears. You are now standing at the threshold of the House of Pain. This is not a metaphor. It is the inevitable destination for any portfolio that ignores the shifting reality of global energy. The House of Pain is the market mechanism that systematically strips value from assets lacking a physical foundation. It is a vacuum that swallows capital, designed to punish those who remain tethered to the illusion of infinite growth. When the energy leak in the strait remains unaddressed, the market begins its brutal work. It identifies the weakest links in your holdings and forces a liquidation. You watch as your positions are systematically dismantled, sold off to cover the margin calls of a system in collapse. There is no room for sentiment here. The House of Pain does not care about your past gains or your long-term strategy. It only cares about the immediate physical necessity of energy. You have exactly one choice remaining. Plug the leak, or watch the House of Pain consume your capital until nothing remains. The walls are closing in, and the floor is dropping out from under your tech-heavy positions. Every second you delay is a second the market uses to tighten its grip on your wealth. You must decide now if you will continue to feed the machine or if you will break the cycle before the house claims everything you have built. Look at the data. Strip away the market noise and focus on the cold, hard numbers that define this crisis. 10 million barrels a day are missing from the global market. This is not a minor fluctuation or a temporary supply chain hiccup. It is a massive, gaping wound in the world's energy intake. To understand the scale, consider that the global economy operates on a razor-thin margin. When 10 million barrels vanish, that margin disappears instantly. This is the largest supply disruption in human history. Every hour that passes without these barrels, the global industrial engine grinds harder against the friction of scarcity. The numbers do not lie, and they do not care about your portfolio's current allocation. They represent a terrifying reality. This is the baseline for the new era of energy scarcity, and the magnitude of this loss ensures that the old rules no longer apply. The hole is not just growing, it is redefining the limits of the global economy. Now, the market enters the macro morass. This is a state of profound confusion where the old maps no longer lead to safety. You look at your indicators, expecting them to signal a trend, but they provide only noise. Traditional hedges that once protected your capital during downturns are failing one by one. Bonds, gold, and diversified indices, they are all moving in lockstep with the volatility, offering no refuge from the storm. You are trapped in a feedback loop of uncertainty. Every attempt to rebalance based on historical models results in further exposure. The market is no longer reacting to news. It is reacting to the absence of stability. Investors are paralyzed, caught between the desire to hold and the instinct to flee. This is the hallmark of the morass. It strips away your confidence by making every move feel like a gamble. You see the price swings, but you cannot find the floor. Your portfolio is currently drifting in a sea of conflicting signals, and the longer you stay in this state, the more vulnerable you become. The time for passive observation has ended. You are watching your portfolio bleed, and the hemorrhage is accelerating. Every tech stock you hold is tethered to a digital grid that relies entirely on cheap, abundant energy. When that energy vanishes, the servers stop, the data centers cool, and your gains evaporate into the ether. You are holding assets that require a stable, powered world, but that world is currently fracturing. This is not a moment for minor adjustments or waiting for a market rebound. It is a moment for a total tactical shift. You must recognize that your current allocation is a liability in an era of scarcity. If you continue to cling to speculative tech, you are betting on a system that is fundamentally losing its fuel source. Survival now demands that you sever these ties before the grid instability reaches your balance sheet. You have exactly one choice. Initiate a decisive move out of these vulnerable positions or watch the House of Pain swallow your remaining capital. Now, you must look past the glowing screens and the flickering tickers. Digital numbers are merely ghosts in a machine that is running out of power. When the supply shock hits, these abstract gains will be the first to vanish. You need to anchor your wealth in something that exists outside the grid. You need hard assets. These are not speculative bets on future growth. They are the physical bedrock of the global economy. Think of the infrastructure that moves, stores, and processes the energy the world demands. While tech stocks rely on a fragile, interconnected system, hard assets possess intrinsic value that remains regardless of market sentiment. When the grid falters, the value of physical commodities does not disappear. It becomes the only lifeline. You are shifting your focus from the digital realm to the tangible. You are moving your capital into the pipes, the storage, and the extraction sites. This is the only way to insulate your portfolio from the chaos of the supply chain collapse. You are no longer chasing growth. You are securing survival. By holding assets that provide the energy the world cannot live without, you create a wall against the coming volatility. This is the only path left. Now, focus your attention on the specific entities that control the flow of power. You need to look at energy companies like APA. These are not merely names on a list. They are the owners of the physical infrastructure that becomes priceless as the supply shock intensifies. When the market enters a state of total confusion, these companies hold the keys to the only lifeline that matters. They own the extraction sites, the pipelines, and the storage facilities that keep the global engine turning. While other sectors crumble under the weight of the supply disruption, these assets gain utility by the hour. You are moving your capital into the physical reality of energy production. APA and similar firms represent the tangible backbone of the economy. When the tankers stop moving, the value of the oil already in the ground skyrockets. You are not buying a ticker symbol anymore. You are buying a seat at the table where the new energy reality is being written. This is a tactical necessity. These are no longer just stocks. They are the bedrock of a survival strategy in a world where the tankers have stopped. Imagine the silence on the high seas. The massive vessels that once fed the global machine now sit idle, anchored in dark, motionless water. In this new reality, the traditional market rules are obsolete. You must stop viewing your portfolio through the lens of growth and start seeing it as a defensive perimeter. These energy companies hold the physical assets that remain functional when the global supply chain fractures. They are the foundation upon which the world will attempt to rebuild its energy security. When the flow of oil is interrupted, the companies that own the wells and the infrastructure become the only entities with leverage. You are building a wall against the coming volatility by anchoring your capital in these tangible, essential resources. This is not a passive investment, it is a calculated move to secure your future in a landscape defined by scarcity. Every share you hold in these firms is a stake in the only system that will continue to operate when the grid goes dark. You are positioning yourself to endure the collapse, not just to watch it. This is the bedrock of your survival, the only solid ground left in a market that is rapidly dissolving into chaos. When the flow of oil stops, the market stops playing games. The price of a barrel is no longer determined by futures contracts or digital speculation. It is determined by the physical reality of what remains in the earth. As the tankers sit idle, the value of every drop already in the ground skyrockets, triggering a desperate, silent race for ownership. You are witnessing the end of the era of abundance. In this new climate, the companies that hold the rights to these subsurface reserves become the most powerful entities on the planet. Every acre of proven reserves is a fortress. Every wellhead is a vault. The scramble to secure these assets is not happening on the trading floor. It is happening in boardrooms and government offices where the survival of entire nations is being negotiated. You must understand the shift. The asset is no longer the refined product moving through a pipe, but the crude trapped beneath the crust. That is where the leverage lies. They are not waiting for the price to rise. They are ensuring they own the source before the rest of the world realizes the supply is gone. The race is already underway. The time for passive observation has ended. You are no longer watching a market cycle. You are witnessing the birth of a new energy reality. The table is being set, and the seating chart is being written in real time by those who control the physical source. You have a binary choice: buy your seat at this table or be crushed by the weight of the transition. There is no middle ground. The market is currently undergoing a violent correction, and those who remain tethered to speculative tech are being systematically liquidated. You must decide if you are a victim of this shift or a beneficiary. Securing a seat means aligning your capital with the entities that dictate the flow of energy. It means moving beyond the ticker symbols that have failed you and anchoring your wealth in the infrastructure that the world cannot function without. If you hesitate, the seats will be filled. If you wait for the headlines to clarify the situation, the cost of entry will have already moved beyond your reach. The new reality is cold, calculated, and unforgiving. You are either at the table, or you are the fuel being consumed. The choice is yours. The transition is not a theoretical exercise. It is a surgical procedure on your own portfolio. You are holding tech stocks that feel safe, familiar, and reliable. They are the bedrock of your past success. To survive, you must cut them loose. This requires a brutal psychological pivot. You are selling the illusion of growth to buy the necessity of existence. Your fingers will hesitate over the sell button. That hesitation is the difference between preserving your wealth and watching it evaporate. Execute the trade. Liquidate the positions that no longer serve your survival. Move that capital into the physical infrastructure of energy. The market will punish your sentimentality. It will reward your cold, calculated reallocation. The transition is complete. You have shed the dead weight and anchored your capital in the only commodity that matters. Do not look for validation in the morning paper. Do not wait for the evening news to confirm what your portfolio is already screaming. The headlines are not your guide. They're the trap. By the time the mainstream media acknowledges the scale of this supply disruption, the market will have already priced in the panic. The window of opportunity does not stay open for the general public. It is a narrow, shifting aperture that closes the moment the crisis becomes common knowledge. If you wait for the headlines, you are waiting to be the liquidity for those who acted weeks ago. You are waiting to buy at the peak of the fear cycle. Look at the data, not the narrative. The data shows the barrels are missing. The data shows the grid is straining. The news will only tell you this once the institutions have already secured their positions and the price has moved beyond your reach. The headline is the final signal that the game has changed, not the invitation to join. Act before the ink is dry or the door is slammed shut. The time for analysis has passed. You are standing at the edge of a fundamental shift, and every second of hesitation is a direct erosion of your wealth. You must move now. Shift every remaining asset into the energy sector. This is not a suggestion. It is the construction of your defensive wall. Look at the market hole. It is growing, widening with every tick of the clock. If you leave your capital exposed to the coming volatility, you are choosing to be the victim. You must lock your position. Move the last of your liquid holdings into the physical infrastructure of energy. These companies are the bedrock. They are the only assets that maintain value when the grid strains and the servers go dark. You are building a barrier against the chaos. Do not leave a single dollar in the path of the storm. Once the next supply report hits the wires, the price of entry will skyrocket. You have the data. You have the strategy. Now you must have the resolve. Execute the final shift. Seal your portfolio. You are fortifying your future against the inevitable collapse. The wall is rising. The assets are secure. You are ready for the storm. The wall is up. Your capital is no longer drifting in the open sea of speculative tech. It is anchored in the bedrock of energy. But the market hole is not static. It is a vacuum, and it is pulling harder. Watch the order books. The volatility is beginning to tear at the edges of the exchange. You can see the tremor in the price action. This is the moment of maximum stress. The hole in the global supply chain is widening, and the pressure is mounting. You have fortified your position, but the storm is now hitting the gates. Do not flinch. Every spike in the charts is a reminder of why you moved. The volatility is not a threat to you. It is a weapon. The grid may strain, the servers may flicker, but your position remains locked. The wall is holding. The chaos is outside. You are inside. The defensive structure is complete, and you are the only one standing on solid ground. The clock is the only sound left in the room. 60 seconds until the wire services update. The market has gone quiet, an unnatural stillness that precedes a massive release of pressure. You have done the work. You have built the wall. Now, you wait for the data to confirm what you already know. Look at the terminal. The countdown is a heartbeat, steady and relentless. Every second that ticks away is a second closer to the moment the world realizes the supply chain is broken. You are not guessing anymore. You are waiting for the final confirmation. The analysts are still debating, still hedging, still trapped in the confusion of the macro morass. Let them. They are watching the past. The screen flickers. The cursor blinks. The final report is loading into the system. This is the end of the waiting game. The data is about to hit the wires, and when it does, the price will move in an instant. The time for analysis is dead. The report is here. The numbers appear. The market does not hesitate. It tears through the old valuations, discarding the speculative tech that once held the world together. You watch the screen. The divergence is absolute. While the rest of the exchange collapses into a chaotic spiral, your position in energy stands firm. It is the only commodity that matters when the supply chain fractures. It is the fuel that keeps the world running, the bedrock that does not crack under the weight of the shock. You are not just observing the shift, you are aligned with the new reality. The volatility has done its work, clearing the field of the weak and the unprepared. You remain. Your wealth is secured not by luck, but by the cold, hard logic of the physical world. The transition is complete. The wall holds. You are on the right side of the divide, holding the only asset that the future cannot function without. The chaos is distant now. The path forward is clear. You are positioned for the new era.